Traders Corner is proudly brought to you by IG, the specialists in CFD trading.
Welcome back to Traders Corner, Summit's no gimmick real money trading show. As always, our guide through the markets is Garth McKenzie, the founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, I sense there's been a lot of gnashing and wailing in the Traders Corner compound in the last couple of weeks. Firstly, you were stopped out of 3 successive trades, and then they all seemed to turn sweet on you last week. But of course, you were no longer in them.
Yeah, that's right. I mean, we had 3 trades. We had Old Mutual, we had Sasol, and we had PPC, and all 3 of those got stopped out last week, and then only to see them recover quite nicely this week. And in the end, it seems like those 3 trades will probably be fine. So our stop losses got us out, and it always begs the question, you know, are our stop losses too tight or not, or all these sort of things. And you know, my answer to it really is, this stuff happens in trading sometimes. It's not the first time that's happened to me. It's not going to be the last time either. It is very frustrating, but you know, we just carry on and we keep looking for the next trade. It is annoying when something like that happens, but at the same time, you know, my stop losses on many occasions have saved me from massive losses.
Yeah.
So I'm not about to go starting to revisit stop loss strategies and things like that. What happened last week is a pity, but it's one of those things. This is a real life trading show, and that's what sometimes happens in real life trading.
Also, I suppose you can't really obsess about trades that have not worked in your favor and then only to see them do well, because then your psyche just gets a little bit warped, and I suppose you aren't really able to trade with a clear head, I would imagine.
Yeah, that's right. No, that's correct. I mean, I think there's no use crying over these things after the fact. Just look forward, find the next trade, and carry on going. You know, with my own trading, what I generally try and achieve on a month-to-month basis is I try and make 4% per month, and I try and do that consistently. So there are going to be months where you have a bad experience like that, but as long as over the longer term I can achieve that, then I know I'm doing what I set out to achieve. And by and large, we've done that on the show this year. So it's still fine. It's no point crying over these things after the fact. That it's part of the nature of trading. You can't win them all, unfortunately. Unfortunately.
Well, I suppose sometimes it helps to zoom out, so to speak, which of course is what we do generally. And you want to look at the bigger picture, and starting off with the S&P 500 index.
Yes, I want to have a look at this, and first of all, looking at the S&P 500, obviously the biggest index on the US markets and probably the most widely followed equity index in the world. And I just want to have a look here, and then we'll look at our local market. This index obviously has a very significant bearing on what happens in the rest of the world, and we are no exception to that. So if we have a look at the S&P 500 here, what's interesting is we had this head and shoulders pattern which unfolded between August and earlier on in November. And then we saw the stock break down below the neckline of that head and shoulders pattern, which was arguably a bearish development. What you typically do is you take the height of that head structure and then you project it down to get your target. And in this case, the target was 1346 on the S&P 500. Now that level has been met. We met it last week Thursday, and then we've rebounded off that level subsequently. What caused that rebound was the prospect of some sort of a deal being reached with the US budget and them being able to avert the fiscal cliff that's been worrying markets so much. So be that as it may, we'll see whether they really can come out with a plan or not, or whether it's all just hot air. Who knows at this stage. But I think we've still got the potential for a bit of a rally back up towards the neckline of that head and shoulders structure over there at about 1405. And if you have a look, that stochastic oscillator is quite oversold and it's starting to turn up now. So I think in the short term we've got a little bit more of a bounce coming, but broadly speaking that chart is still a little bit worrying, given that we've still got that major head and shoulders pattern in place. So we'll see how this unfolds in the weeks ahead, but I think an element of caution is possibly still advised from a medium-term perspective, but certainly right now it looks like we've got the potential for a small bounce here.
Okay. Bringing it back to our market, and you said that we do track the US markets, although actually looking at that graph, we've kind of been out of step with what's been happening internationally, in that we've been pretty strong compared to what's happened on US markets in particular.
We have been, if you look at the 2 charts, you'll see that they don't really mimic each other. That S&P 500 graph, actually from the recent high to the recent low, is down 8.5%, believe it or not. Our market, on the other hand, is only down from the recent high to the lowest point that we've seen over the last few days, only about 3%. So Obviously we've outperformed, but what you must remember is that over that time we've also seen the rand weaken quite dramatically, and that also tends to then muddy the waters and skew the picture somewhat. So if you put our market in dollar terms, you know, you'd find certainly a very different picture would emerge. But if we look at our top 40 index here and look at the technicals as they stand, we've got this nice steady upward trend which goes back to the July low. And I spoke about this last week. I said that we had this lateral support area at 32,500 that also corresponded with the uptrend. And what you can see is we've actually bounced off that support level quite nicely over the last day or so. Our market is becoming fairly oversold, as you can see with that stochastic oscillator at the top there. And what I quite like here is that this pullback that we've seen over the last 2 weeks or so has been very controlled in nature. So it's almost like a nice steady consolidation back to the uptrend, and it now begs the question, will we break out of that little consolidation? It's starting to look a bit like a bull flag type of pattern over there. Are we going to break out the top of that and then go back and retest our recent highs and maybe even make a new high? Who knows? We'll need to see first of all whether we can actually break out the top of that consolidation or not. But from a broad perspective, this chart still actually looks fine to me. It's still, while we're holding above that upward trend, I think you've got to still remain in the bullish camp here.
And if it did actually bounce up, it almost looks like it might form another head and shoulders pattern.
It's possible, you know, if what were to happen here, where we got the market to move up over here and then start to roll over before it got to the prior top, then it's possible that this whole thing over here becomes a head and shoulders pattern. But it's very early in the day to start speculating on that, so we're going to have to just see how it unfolds in the next couple of weeks. At this stage, I certainly can't say with any conviction or not whether we're going to see a head and shoulders here.
Garth, you mentioned the rand-dollar exchange rate, and you did say last week something to watch because you foresaw a bit of a weakening, which is exactly what happened, although it has subsequently pulled back a little bit. What are you seeing at the moment?
Yeah, so what we showed this chart last week, as you mentioned. The significant or the dominant feature in this chart is that major break above R8.55, which we saw in October. That's a significant break, and it goes back even further than what this chart pattern here is showing. So that's quite a bearish break for the rand, and it basically puts our currency in a new trading range, and it points to further medium-term rand weakness. If you have a look what's happened over the last month or 6 weeks, thereabouts, this currency has been trading into a triangle consolidation pattern, as indicated there. And what you typically do is you take the height of these triangle patterns and then you project them out, or to project that height at the broadest point, project it out from where a breakout occurs, and that gives you your first target for a triangle pattern. So in this case, it gives us a target of about 9 Rand 10, 9 Rand 15, that sort of area. So we've been up to 9 Rand on the currency this week. It has pulled back a little bit now. I think we've been trading at about 8.85 today. But from a technical perspective, that chart still looks as if the bias is towards further rand weakness going forward. And I think also leading up to the policy conference in December in Mangaung, then there's a possibility that some of the rhetoric around that could possibly frighten off a few foreign investors, maybe. Certainly, and I'm not here to make political comments.
You look like you're sort of gleeful at the prospect.
But well, that's what the charts are telling us anyway, so, and sometimes they don't lie.
Okay, so that's a trade to watch. But getting onto this week's trade, Shoprite. That's an
yes,
interesting
yeah.
one.
Some people are going to think I'm mad for doing this trade, but I'm buying Shoprite this week. And I know a lot of people are going to say, how can you buy a stock that's on a PE of 25 or whatever it is? It's very expensive, which I acknowledge. But the point is, I generally like to try and trade with the momentum, and what you'll find is that when the market moves up, often the strongest stocks will recover the best or will move up the best. And there's no question that Shoprite has been probably the strongest share on the JSE, one of the strongest shares on the JSE for the last couple of years, and that remains the case. So if we look at the chart, what we've got over here is it's been consolidating sideways for the last month or so, in a sideways range between 174 Rand and 184 Rand. And to me, that's just, it looks like a very nice, healthy consolidation before we have another leg to the upside. And what you typically do here is you take the height of that broadening of that trading range and project it up from where the breakout occurs, assuming there is a breakout, and that would give a target of about 195 Rand there and thereabouts. So I'm preempting the break, which is perhaps a little bit risky, but I do think that the pattern certainly
warrants
I
it.
think it warrants it, and I think the greater likelihood is that we'll break to the upside here. So I've gone in and I've bought today at 178 Rand 50. I'm using a stop loss at 172 Rand. That would mean if we got to 172, it would have meant that it's broken out the bottom of that trading range. And then the target, as I said, is 195. So it gives us a fairly decent risk to reward ratio on this trade. The other point I just want to make about this is that this has been a very popular stock for short sellers to try and short. And I don't know why you would short a stock that's got such strong momentum behind it, but anyway, there are people out there that do this with regularity. And as long as there's a lot of short interest in the stock, they're always going to need to be buyers if the stock moves up. The short sellers are going to be experiencing pain, and they're going to need to buy back their shorts. So I think there's a propensity for the buying pressure to remain quite strong here, particularly if the shorts start to cover.
Do you think that's one of the reasons why Shoprite's actually done conversely as well as it has, is because there's such short interest and the shorts get squeezed out every time there's an increase in the share price, and that just kind of exacerbates the trade?
Yeah, I mean, one of the things Warren Buffett always said is, he said, you're welcome to short my stock because it means you've got to buy it back at some point. And I suppose the principle is the same here. As long as people are short of this share, they are going to be more inclined to be forced buyers when it starts to rise. So yeah, I'd like to get on the side of the momentum, which is what we've done here.
Garth, can you take us through the trade in greater detail?
Sure. So we're buying it at 178 Rand 50. The stop loss is 172 Rand. The risk per share therefore is 6 Rand 50. I'm risking only 1% of our account on this trade. So our account is sitting at about 379,000 Rand at the moment. So 1% of that is 3,790 Rand. So if I take the portfolio risk and I divide it by the risk per share, it gives us a figure of 583 shares that we can effectively trade. So I've decided to round it up in this case to 600 CFDs. So that's what I've done for the portfolio this week. The target is 195 Rand, as I mentioned, and the risk to reward ratio therefore is 1 to 2.5, which is quite decent in my eyes.
Okay, very interesting. Garth, if we look at the portfolio, it's still up pretty nicely, but as we said last week, there was a bit of a calamitous run of bad luck.
There was, yeah. So we've got our recent couple of trades there. We've got our Shoprite trade that we've just spoken about, and then the Old Mutual, Sasol and PPC, all trades that got stopped out, unfortunately, and you can see the losses that we made on all three of those trades. Very unfortunate. We've got our option structure in the background, and for regular viewers, they'll recall that we actually received premium on this options trade, and I hadn't accounted for it previously, but at this stage I think it's so unlikely that this option structure is going to work out for us. So I'm going to just account for that premium that we received there of 1,300 Rand now. And it puts our account just short of 380,000 Rand.
Garth, just remind us very quickly what that trade was for those who maybe haven't been following the show
so
regularly.
It's a put spread option structure. So we basically long a put option at 30,000 and short a put option at 28,500 over the top 40 index. And at that stage it was with a view to creating some sort of a hedge if we were to see any downward pressure in the market. Obviously that hasn't happened. Our market's been very, very strong. So the structure effectively will expire worthless, although actually slightly better than worthless, because in this case we received a premium paid to us to do that option structure at the time, and the premium we received was 1,300 Rand.
Okay, so to end off with, what are the upcoming courses? I see you've added another in January.
Yeah, I have. So these are the ones that we've got now. December, we've got, well, first of all, 24th of November, this week, Saturday. I've got one place left on this course because somebody's dropped out. So anyone that's interested in attending this week, Saturday, can still email me. Then in Cape Town on the 1st of December, I've still got place available there. And then I've added another one on the 19th of January next year. And this will be a course sort of dedicated to looking at how to trade in 2013 and to help try and refocus the mind, I suppose, in terms of getting delegates focused for 2013. I think it might be a nice Christmas present for anybody that is really interested.
Sales pitch there.
Anyone that takes their trading seriously, you know, this is a gift that can keep on giving. So if you're interested, there's lots of space available for that course on the 19th of January. And any of these courses, you can email me on garth@traderscorner.co.za and I'll send you the details.
An expert in trading and marketing too. Garth, we'll leave it there. Thanks as always.